Hi, everybody. This is Gary Dean, and this is our nightly video report for Thursday, March 2nd, 2017. So we actually finally saw the Dow close red and red pretty good. I mean, it's 114 points, which is, it's just kind of a retracement from yesterday's 300-point rally. But the thing is that we really haven't seen a 100-point drop, so we have to go all the way back into January, I think. So, um, things are changing. They doesn't mean that we can't bounce tomorrow or even Monday, but they're just the dynamics are changing, some of the things that I mentioned in the morning notes is just really another confirmation, and it's one of the newscasters on the financial stations was just outright mocking a fund manager because he was only 70% long this market and wasn't really quite sure why anyone would listen to him since he's not leveraged 100 and 150% long since November. So that kind of mentality, that's what sets up these trap doors, and people aren't going to see them coming. So today we saw a little bit of let's say, scratching of the heads of the bulls, and meaning that, we had the pullback, but typically in the past, what's happened was, these pullbacks intraday, we saw reversals, and then they closed the day down a couple points, period. So the people were buying these dips, and then they kept going. So I think they're going to try to, they may take it down some more tomorrow, or they may take it up. I'm kind of open-minded on that, just because I'm not sure if they have to lure in more some more bulls before they let the things go. But we're at a time period that this can turn at any particular day, and it would make perfect sense. So we're in that time period that you have to be careful. Don't listen to these people that are on TV telling you that the market's never going down, and they're going to give you your reasons with the tax cuts and stuff like that, because the tax cuts aren't going to come for 6 months, and the market has no idea what they are going to be. So it's one of those things that you just really want to pay attention to what's going on, and just go with the belief that we are at a turning point. And with the sentiment numbers that have been coming out, where they've been extreme bullish that I haven't seen for this long. And typically when you have everybody leaning in that one direction, they people end up too long when the market breaks and not short enough, and it's happened every time, and that's what causes these big drops. So here we are. Like I said, at the S&P down 14, just really a retrace from yesterday's 30-point rally. So I'm not pounding the table that this is the breakdown. I don't know. Maybe they have to head higher. We don't really have the bearish divergence on the 60-minute charts. So that would give us, say, a hint that they may try higher. But the fact that we've just had so many of them without any real price break, we may not have to get up there. You leave the door open for that final push up to make the divergence here. Really what the bears are going to have to do is push it through this 2371. If that doesn't hold, there's going to be some panic selling down to probably the 2355, 2348 level. If that breaks and we're coming down and doing a 23% retracement, that will land us at the 2327. All of these would make perfect sense. What it does, it's kind of hard to put any sense on this. Just like I said, I'm going with the fact that any strength I'm using to short, because I'm on the belief that we have a lot more points that are coming. Even though when I started saying that, that was right around this area, so I didn't really see it going up 110 points from there. I thought we had a little bit more, so I was wrong. But I still think we're taking out these levels here and going to be coming all the way down here. So very overbought. 15-minute chart. You can see that we have this was the regression channel that I was showing you. So we're at the bottom of it right now. Again, 2370. This is your support area. If they take that out, then we're going to probably be closing some gaps and coming down a little deeper than some people were expecting. But a little bit, the MACD is oversold here, but you can see momentum still has plenty of room to go before we are even close into oversold. So I wouldn't be too aggressive buying. Just for that reason that we haven't really gone below the 50 level on the momentum. And every time they keep moving these up like that, they're using a lot of say bearish energy. So if we're gonna just take a look at what the bears would want to hold down to keep, say, momentum going on the downside, and that would probably be right around this. I would say the first line in the sand is going to be the moving averages, and that's at the 2384 and then the 2386. If they get above that, I would say really if they start breaking above this 2393, we're probably coming up and taking these tops out. So right now, like I said, I'm on the side that I have time on my side, just because this thing has been extending and carrying on for so long that it's nothing goes up forever, and it's when it does break, everybody's usually caught off guard. It's been frustrating, so I'm not going to sit there and say that it hasn't been, but this is what it is. The market is going to throw curveballs all the time, but typically when we come into these types of patterns, the drop is going to be really, really fast and really, really hard. So with that, let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.